Hey everyone, this is DayTraderRockStar, and with a little market update and a recap of the year and some other surprises. Happy holidays. It's the day after Christmas. I'm about to start some more research and get out the next 10 for 1,000 watch list, but I figure we'll touch base with everyone, even non-members out there, to talk about the market conditions and how we left off and going into this next week. And even better yet, let's talk about the keys of being successful in trading. Now, looking back at this chart, I would love to go out 1,000 feet from a chart and look down on it. It seems much more clearer than you jump right in and you come down to it real close, and it really does look like a foreign thing. You're like, all right, there's a lot of big ranges here, but as farther you go out, the more things look like a pattern playing out. You see the moves down, the move up, the move down, the move up, and move down. Now, if I could ask you a question, where would you want to be in this market? If you felt, where would you be most comfortable in this market? Where do you want to be in? If you could pick certain areas of the market to be in, all right? And I could probably say you probably want to be in the beginning of these moves. This move, this move, this move, this move down. All right, there's certain levels. We call those, pivot areas, and we need to identify those. And that's that's what I have to do for you, is identify the pivot areas. Every trade taken between these pivot areas are a higher risk trade. These are usually your best probability, your low risk, high probability trades. So to recognize that, you can recognize it very easily, stepping back and seeing that daily chart and seeing some of the indicators line up, the oversold conditions on the stochastics, what I call a 1, 2, 3 pattern, where you have 3 pivot areas. You draw a parallel line versus the top 2 or the bottom 2 pivot areas, and that fourth line, that fourth pivot area, becomes your trade of focus. And if the other indicators line up, then you have a recognizable pattern. And this is great. When this sets up, it sets up great. And you got to be part of the market. And that's really the higher probability setups in the market. And that's what's so important. Us being, who we are, human beings and stuff, we're very, we're very conditioned to do everything on a faster pace, and it's very hard for us to wait until November to get a good rally in the market, to feel comfortable in the market. Right now, there's a lot of chop. So even if you did get into a market that's grinding up, there's always that chop. And it's, the problem with a trader, again, emotional traders tend to, if you don't see the move up, you get scared, and fear is, the trader's worst enemy. And you lose your confidence in a trade. You don't, and that happens when there's no signal. But when you have a signal and things start working towards you, then you already have, you have a high confidence in your trade. You're more likely to stay with it. So you have to have the patience to get to those points. So we have to break that down. So instead of waiting every 2 months to get a high probability setup, we break it down on the 60-minute chart. And of course, we did see that even on the 60-minute chart, you zoom out and you can actually see very important levels in the market. Recognizable channels. When you see the recognizable channel and you see the oversold stochastics, channels like this break to the upside. There's certain rules that I kind of pass on from my market experiences. Certain pattern recognition tricks, how to trade bear flags, having the stochastics getting overbought or oversold, and trading the directional pattern of the trades, and that helps so much. And now breaking it down to the 60-minute chart, you see that all of a sudden, instead of having your setups coming every 2 months or every month, you're seeing your setups come up, once a week. Once a week is, that I could deal with. I could deal with once a week. But now we have so many trades. There's so many stocks and so many. How do you find all that? Well, one thing is I find that for you, but we still need to make things better. We need to make things sharper and tighter, because you're still apt to get into a market when the market's running. You feel like you're missing it. It's very hard to chase a market. We all tend to chase markets if we don't get in a good position, and the market comes back and bites you a little. So it's always important to establish the higher probability setups before they happen. We knew that this was going to happen. This was actually, I sent out a video saying, looking for a Tuesday hyper spike. And that hyper spike happened right on Tuesday. And everything led to that. It was the downward channel, was the oversold stochastics, everything lined up on the 60. That means that next day, everything was lined up for a pop. And we actually got that great pop on that market. So things worked out really well for that. We ended up closing very strong into the week, and this is, this is typical of a holiday session. There's a lighter volume, but there's that upward momentum, and there's that kind of squeeze that you just can't try to top and short these markets. This type of market, low volume, and we're going to go into the traditional Santa Claus rally this week, so we could even see more upside. And if we look back out on that daily chart, you could see, the upside. You still have a little upside before we get technically on the stochastic side of things overbought, and I would give that a couple more days. So, and plus the potential of more news out there in the market and everything else comes into play. So right now you have two recognizable patterns. You have this downward trend line, which we did break through, which is very positive, and you have this upward channel. So you can pay attention to these levels as they play out. Market doesn't go straight up, and news can affect it at any time. So we have to be vigilant on this, in this market. And actually, in times like this, be very cautious, be very fast in taking profits, and just be a little bit safer, because when the signals come, that's when you be a little more aggressive. Until the signals are there, have a little more patience. That's the way to survive the markets these days. And remember, this is, markets are always evolving. So what works one day might not work the next day. Right now, it's about identifying things that work, about identifying momentum, and and my five indicators that I use, the stochastics, the recognizable pattern, which I classify as an indicator, is knowing your patterns and knowing where to pick them up, and know what a pattern means, know what an inverted head and shoulder is, know what its profit point is, know what its measured move is, know what a falling wedge is, know how to know what a rising wedge is, and how the stochastics line up with them and give you the best head and shoulder setups, double bottoms versus other setups, and reversal candlesticks. All important to know. And if you could tie all those together, layer them on top of each other, and eventually bring the market to you, and don't step back and take the trade only when it comes to you, you'll have tremendously more successful trades out there. All right, just revisiting the concept of letting the trade come to you and recognizing patterns before they move. It's called pattern identification, and I like to call it like building the pattern before it happens. That's what the 1, 2, 3 method is. That's what establishing what a trend is and how lines and trend lines work. Another thing is, it's always good. Everyone's a different trader in this environment. You have big whales out there. You got futures traders, option traders, you got day traders, you got intraday swing traders, you have investors. And there's so much information coming to you during the market that it's overwhelming sometimes. So what I'm going to do, and what I've been working on for the last couple months, at least the last 3 months, is a new addition to the site, which is going to take everything and make it easier. It's gonna I keep on saying it's going to be the revolutionized trading, at least on the site, because it's going to keep all the static out of the trades. Right now, you could be a short-term scalper in the market and trade that way, and then you could also be a swing trader, overnight holder. You can be a long-term investor. But the key thing is knowing when to take those trades. Now, intraday, when you're in the battle in the pits and you're battling out, and you see setups come to you. Those setups, are happening as they happen. There's no guarantee, they're going to move in one direction. But the shorter the time frame, the faster the move, and kind of like the shorter the move is going to be. So when you deal with a 1 minute time frame and you see like an inverted head and shoulders pattern form, that's pop out of that relative to the neckline to the head might be a point or two. Might move just 2 points, where that shows up on the 60-minute chart might move 2 days. And tremendous more opportunities in the longer term charts. So I always recommend to have, if you're able to, have a more aggressive account, and have an account where you can trade, have a longer term account where you see these really good setups on the daily, and that's when you actually start to look at placing your trades in the longer term account. You have an account where you want to get into trades only, you're waiting around, but that this is a really high probability setup, so you might start to buy stocks down at this level that you normally wouldn't do intraday. So that's kind of a longer term account. Then you can have a shorter term account, or a combination of short term or just a day trading account where you trade the market intraday, and you could sell, you're just moving with the markets. But I think it's always important to have that longer term account to take advantage of the market when they do give you the setup. That way you don't get emotionally involved in your trade. Anything tighter than a day, you get very emotional going into the close, and in the news you're being affected. But the higher probability setups on the daily chart, you really want to take active part in those, and sometimes having that account where you don't have to just monitor it all the time, don't take that with a grain of salt. You always want to be on top of it, but understandable. You're dealing with a pattern that can play out over a couple weeks versus a couple hours. All right, so to deal with all the intraday chop, the static in the market, the temptations out there as being a quote, a human being, we're going to be launching a section called high probability setups. And basically what this is going to be, these are going to be there's going to be an index of 30 stocks that we've traded before, we're highly familiar with, that have that historically traded in patterns or trends, and they meet certain quality standards. They have to be a quality stock, on the and that will all be defined when we do launch the site. But this is what we're trying to do, and what I'm going to try to do with this is really minimize the risk in the market. What this is going to be doing is taking that risk out of the market. We're going to really focus on, again, a group of stocks, which makes it easy to have the patience to let those stocks rotate. If you have 30 stocks in a rotation, and these stocks, some of the stocks come into play and some of them go out of play, what we'll do is we'll identify the patterns, identify the probabilities of the trade, understanding that there's better times in the market to trade certain stocks than every day, and just give you that really pinpointed best opportunity to trade that trade throughout the whole time frame around that. So it's usually going to be the best time to trade that trade, usually in a 7 to 30 day time frame. Just to give you like an example, you might see a stock like Hess on there, HES, and Hess, a quality stock, Hess Corporation. You can start to see it actually rotate, and it's a stock that you can actually measure out. So it's a stock that we'd concentrate on all the time frames, and we'd also use all the different indicators to to wait for the setup and know that identifying the coil stochastics, identifying the pullbacks, the pattern recognition, the certain support and resistance levels playing out in the market. This will really give us some really good opportunities to issue high probability setups where they're really great setups in the market to run. And and again, a combination of overlapping time frames will be very important. That looking at the 60-minute chart and only waiting for the daily to set up also gives you even a higher probability setup. So each one of these setups might give you a good trade every month. But if we break it down even on the 60-minute chart, that we can identify that much easier. We can really qualify the trade and set the alert before it actually happens. Waste management. Some of these stocks I actually go over all the time in the room, but these stocks will be, again, a focus stocks where it'll be updated each day, and you'll know that the trade is setting up before it happens. You'll have a buy trigger. You'll have a stop. You'll have a target area, and this takes a lot of the guesswork out of it. It'll show you each trade, each setup will give you an updated chart on it, a video on it, talking about the pattern, the education that comes behind it, and basically keeps you at an area where you're not just randomly trading the market. You're really just taking only certain levels. And again, remember, these are 30 stocks instead of, so that we can really identify and break these trades down as they appear. And when they do appear in on-quality stocks, you have the best opportunity in the market to trade those. And also taking the personal touch of understanding market conditions and stuff and sending out like a market barometer along with these. So very excited to bring that to you because, you know, like I said, if you're not taking a high probability setup, you're taking a lower probability setup. And that's basically what it is. It's very easy to go back on a chart and say, well, this is obviously a high probability setup. This is obviously a high probability setup. Everything lines up. But how often do you end up taking those things? And how often sometimes do you see them after the fact? All right. So my job is to bring them to you before the fact, give you the best setups, the best quality stocks, and take all the risk out of the market. You know, in this day of risk and stuff, you know, that's one of the main issues is just being involved in the markets when you don't have to be. If you could get a better return waiting a few days, then that's great. And, you know, and this you could continue to do your scalping and your swing trades. You know, that's what we do. But you have to also understand that you know, doing that, it takes you out of your game, or it does increase the risk a lot. Here's Deere, another example of a stock that would be on the HPS 30. We're going to call it the HPS 30. And again, you know, waiting for those stochastics to set up on the daily, overlapping on the 60-minute chart. Also seeing the entry that would be down here, representing the higher probability because of the 2 time frames. If there's pattern being recognized there's other indicators like support levels, gap fills, and stuff. All that would be addressed on the video, but all of it really giving you the best scenario there. So really a great tool to have. All the work's done for you. You know, this is, you know, hours and hours and hours of research where there's really no way of arguing the fact that these setups will be the best setups out there in the market. So again, it's just about a matter of letting them come to you, taking them off the table when they move, and sending a defined stop underneath them if they don't. Everything in place, it you know, it should be a no-brainer. Now let's see what else we could do right now. All right, and just want to also go back and look at some of the trades from last week and understand that, again, trades in this next 2 weeks, last week and into this week, is going to be a little more on the holiday session. It's going to mean there could be some upside, but there also could be a little more volatility, and news continues to overhang this market. So with that said, last week we started off the week by taking RAI off, and RAI was Reynolds, and Reynolds really looked like a good setup. But I think I just jumped the gun because it wasn't a high probability setup. And again, I just want to, you know, sometimes review some of the trades just to show you that even myself could get chopped out of a trade if you're not waiting for the optimal setup. And I was just something about the setup I didn't like, so I ended up taking it off flat. And that was that trade here. And then we started a position at SOA, which was a different setup altogether. SOA. Solutia, and and this one was a high probability setup. It was really a nice recognizable pattern. Was on the 10 for 1,000 watch list, and 60-minute chart really gave us a good setup. We got an oversold level, and really we just had a nice move off of that. It was a nice recognizable pattern. Loved the trend line. Actually, it was a small cap stock. We talked about being a small cap stock, and we eventually got the breakout on that. So actually, it worked out really well. Okay, what do we got here? Then Deere. We took Deere off. Took Deere off. B2. I actually added to Goldman Sachs on a different account. I'm always looking to add to some long-term stuff like Goldman. Amazon I've been building a position in, and a lot of the ES trades will show up on this too. Even though, you know, I kind of audible the ES trades, we've been doing more and more of the ES trades, and that's going to come into play early next year. We're going to have a whole ES section also. Nike, let's see where we are here. Position SOA, sold Deere. After lunch we bought BTU. BTU here, 200 shares. And 23. That looked like a really good setup too. BTU, again, trying to qualify the trade is the important part. The oversold stochastic, the multiple bottom, or actually the double bottom here, the recognizable pattern. As long as there's an upward trend line pulling off the 200, actually looked like it was a good setup here, and it ended up being a good setup. Then Nike. Nike came out with earnings. NKE, it was in and out of that one pretty fast. Nike, it moved up. It was actually would have ended up being a good trade, but that was again an intraday trade. I would like to have held on to that one a little longer. I ended up selling it because it was just too volatile for me. Ended up adding to Amazon. I actually had a scalp in Amazon too. I have on my scalping account. Bought Amazon. I got stopped out of that, but also picked up some more Amazon for a longer term account. Trade a little more ES, and I also did trade the traded Sienna a little here. Again, here I actually was trading Sienna. Talked about that earlier in the day. I was trading Sienna, so I ended up selling that. That was a good trade. Added to that one. Added to, let's see, sold the SOA. We ended up selling the SOA. About up 77 cents. Then we ended up selling the BTU. BTU and SOA got sold at the same time. Again, added to the Goldman Sachs. Added a little more to Amazon, AMZN. Another 20 shares. A little more ES trading. Bought Verizon, 300 shares. Gainco's recommendation. And did some other trading. I picked up some more IDCC in another account, and that was about it. We ended up selling, or actually bought a little more Sienna for a trade, sold the Sienna, and then finished off by trading the ES for the day. So again, a very volatile week. Something I want to really get back to is just being more addressing the higher probability setups, because the intraday trade, if we go back here and take a look at it one more time, all right, as you can see, just looking at the summary of the trades here, looking pretty good for the week. Added to some Amazon. The BTU trade worked out nice. Sienna, which I was trading on my own here, actually worked out fine. ES trades kind of broke even on that, minus commissions, which was kind of strange, for the week. And that was, and we're working on some things on the ES right now, because we have a good, just really trying to measure out the risk reward on the ES. Trades are working good, but I just have to get a little fine tuning on the stops on the ES. Goldman here, I did a little scalping of that, did well on that. Again, the Nike got pretty much flat on that. Halliburton got stopped out on that. The RAI, again, that took that off pretty much flat, I think. Yeah, what was that? Well, actually, RAI was down 200, and the SOA, again, nice trade on that. So overall, pretty good on the trades. And again, just going into this week, look forward to bringing these new things. Also look for a new ES section, and of course the high probability section coming in the new year. So I'm going to get back to the research. Going to put out a new watch list right now, and we'll talk to everyone in a bit.